Tom Lee just made one of the boldest Bitcoin calls we've seen this year. Not just a price, but an exact date. We're talking about $250,000 Bitcoin, and it's closer than most people think. But here's what makes this different. This isn't hype. It's based on real data, macro shifts, and signals most investors are completely ignoring right now. So the question is this the start of Bitcoin's biggest move yet, or a setup for something no one sees coming?
Crypto is highly correlated to growth stocks in America. For instance, the white line here is the software index in the US, and the orange line here is Bitcoin. As you can see, they kind of have the same chart. So if we have oil concerns and investors are buying growth stocks, that actually means they're going to begin to buy crypto. And that's the case. In fact, crypto has been outperforming since the war started. This is Bitcoin on the left relative to the S&P 500, and the right is Ethereum. And as you can see, ever since the war started, crypto has been outperforming. Okay. Now, I believe Ethereum is bottoming soon. It's been a terrible crypto winter. Since October of last year, crypto is down roughly 60 or 70%, and it's been very painful. But I do believe we're actually near a bottom. The first reason for this is that I think gold is no longer outperforming crypto. So last year, gold outperformed crypto, rose 73% last year, while Bitcoin fell 30%. But gold has gotten too big. Gold is now a $41 trillion asset class, okay, which means it's bigger than the stock market. Now, I don't think it's too large, but it's become so big that its volatility is affecting your portfolio. For instance, in a single day, gold's price value changes by roughly $5 trillion, okay? That is 4 times the size of Bitcoin. So if you own gold, which is great, remember a lot of people own a lot of gold, but that means you probably don't own enough Bitcoin. And you might be owning gold because you think it's a good inflation hedge, but I do want to keep you grounded on the facts. In the last 55 years, gold has underperformed inflation 48% of the time. So if you look at 3-year return, 48% of the time, gold actually had a return below inflation. So as much as you think gold only goes up, because it did go up a lot last year, it's not as good an inflation as you think. In fact, Bitcoin is a better inflation hedge. Since 2009, Bitcoin has only underperformed inflation 3% of the months. So 97% of the time since the creation of Bitcoin, it's outperformed inflation. In that same period of time, gold has only beaten inflation 56% of the time. So Bitcoin is a better inflation hedge than gold. Let's think about another reason why I think the crypto winter's ending, which is really the price action of Ethereum. Bitmine works with an advisor named Tom DeMark. He's a legendary market timer. And he's provided an analysis to us that says Ethereum in the last few months, especially since October, is really mirroring what happened to the S&P 500 in 2011 and what happened to the S&P 500 in 1987. If you were involved in US markets, both times marked major declines in the S&P. Well, according to him, there's a 93% correlation to what Ethereum's doing today to what the S&P did in 1987. And in 1987, if you apply that same forecast, Ethereum would have bottomed on March 7th. And if we're correlating this to the 2011 episode, Ethereum is bottoming today. So using his analysis, we think we're at the bottom or exiting the crypto winter now. And another way to think of it is this measure called realized price. It's very popular with doing the same math for Bitcoin, but we're doing it for Ethereum. Realized price is looking at the blockchain and looking at the average purchase price of Ethereum. So currently on the Ethereum blockchain, the average purchase price is $2,241 for Ethereum. And if we look at the two most recent lows in 2022 and last year, Ethereum traded at a 39% discount to the realized price in 2022 and a 21% discount in 2025. In other words, your average position was in a loss of 21%. Currently, we're at 22%. So we're at the level where in 2025, Ethereum started to turn higher. And finally, before you lose any hope, keep in mind over the last 10 years, okay, Ethereum has outperformed every other asset class over the past decade. So in the last 10 years, Ethereum's return is 49,000%. That means almost 490 times your money. Bitcoin was 11,000%, which is great. That's 100 times your money. But look, even something like NVIDIA, which has been, of course, the single best stock in the US, it only returned 65 times your money. So again, Ethereum has been a great store of value. And again, we think we're at the end of the crypto winter. Okay, but let's say that the crypto winter's over. Does that mean you should be buying Ethereum here? Well, historically, Ethereum bottoms are V-shaped, and that's something that our company is positioned for, Bitmine. What I've put together is I've marked the last 8 times Ethereum fell around 50% or more, okay? So you can see they're all clustered. In fact, in the last few years, there are 3 clusters of 50% declines. In fact, last year, which people forget, Ethereum fell 64% from January to March. So it had another mini crypto winter last year. Well, each of those 7 previous Ethereum declines all had a V-shaped bottom. So that means if we have a V-shaped bottom in 2026, we may return to 5,000 sometime this year. And that would be our expectation. It took us roughly 4 months to fall from 5,000 to 1,800. It will take us less than 5 months to recover that decline. Okay, so finally, keep in mind, you don't necessarily want good news to happen. Markets bottom on bad news. So what you want to have happen is something comes out that makes you think Ethereum's in trouble, but Ethereum's price goes up. For instance, today the Ethereum Foundation put out their new position paper. It's not quite anti-institution, but they're focusing on what they call the core identity of Ethereum. Many people thought that was anti-institution, but yet Ethereum actually rallied today. Okay, well that's an overview because I think the crypto winter is kind of ending. And I want to talk to you about why I think there's multiple drivers for adoption and why Ethereum is going to be an important player as we think about the future. Okay, there's 3 things that I think are driving Ethereum's future. Number 1 is Wall Street, okay? Wall Street is rebuilding their financial system on the blockchain. There's a lot of reasons for it, but I don't have to tell you this is pretend happening. This is actually what Wall Street is doing. Whether it's BlackRock, Jamie Dimon saying, digital asset ledgers are superior to existing financial systems, it's already happening today. And you may wonder, what are the reasons for Wall Street to build on the blockchain? There's too many reasons to talk about, but I'm going to just walk through 4 of them so you have a better understanding. Number 1, Wall Street has all these different ledgers, accounting systems, etc. But a shared ledger, okay, really provides a huge increase in efficiency. The second, and this is something you've heard talked about a lot, is tokenization. It offers 24/7 trading. That's what stablecoins are. It's a tokenized dollar. But as in my conversations with banks, a big part of the reason that they're interested in tokenization is not just 24/7 trading, but it's really improving what they call collateral mobility. It's going to be much easier to do lending on assets when they're tokenized. So I think that you're going to see Wall Street take advantage of this idea of collateral mobility. The third is it's just a complicated term, but the idea is money becomes software once it goes on the blockchain. And it's already happened today. So all money today is basically software. There's going to be a lot of interest in then moving other things onto software, whether it's reputation, intellectual property, etc. And then finally, they're using Ethereum because, of course, that's the standard everyone's using. There's a huge development community. But also, when we talk to the banks, Ethereum is really the platform that many are comfortable with. So it's happening, but they do need regulatory clarity. The next driver for Ethereum is agentic systems. So this is AI. And you might wonder, why does AI and agent systems need to use the blockchain? Well, there's a lot of reasons for it. Okay, and we're already hearing more and more conversations about, look, as AI systems and agent systems start to kind of go, what they say, quote, in the wild, they need a way to actually manage information and collect payments. And this is something that Vitalik has understood. So Vitalik has already sort of tasked the Ethereum community to make sure that Ethereum is AI ready. Okay. There's, again, you might wonder, why do AI systems need to use a blockchain and why would they use Ethereum? So first, there's this idea that agents, like if you have using Claude or ChatGPT, etc., it's already only mainly operating on your device in a closed system. But when you start to send it out in the world to do things for you, you're going to need an identity for that agent. And that's what they call decentralized identities. Well, the one way to manage a decentralized identity is to stick it on a blockchain. Now, as all these agents work with each other, they need to coordinate with each other in a neutral way. So this is like the idea that AI agents need a neutral state. And then the AI agents, as they collect payments, need instant settlement, which is what blockchains do. So you can see it makes a lot of sense for AI agents to be working on a big public chain, which everyone already agrees has instant settlement and decentralized identity. And this is something that we already are seeing the crypto industry embrace. Brian Armstrong and CZ both say that they think the next billion users of blockchains are actually probably going to be AI systems. And of course, Ethereum is, again, AI ready. They have smart accounts, conditional accounts, programmable relationships. So again, Ethereum, I think, is very well positioned for AI. Okay, and then the last thing that I think is going to be driving Ethereum's value is the creator economy. Now, this is, again, a function of both of the above, but creators today are very worried about losing their fidelity or identity because of AI systems and deep fakes and video, etc. And in fact, there's already been a lot of interest from content creators like Mr. Beast to make sure that using blockchain and actually things like WorldCoin to prove you're human, to create content that is only proven to have made by a human and therefore be paid appropriately. Okay. So I've talked about why I think the crypto winter's ending and why I think Ethereum has a lot of growth drivers, okay? But let's talk a bit about Bitmine now. So there's a lot of DATs out there because Bitmine is a digital asset treasury. But in 2025, I think that there's been a very clear shakeout, and it's what we call the rise of the dominant DATs. There's over 80 digital asset treasuries out there today, and but only 2 of them actually have meaningfully captured any assets. It's MicroStrategy with about $52 billion of Bitcoin, and then number 2 is Bitmine. It's about $11 billion of Ethereum held today, and as you can see here, everyone else is quite small. I think more important than how much crypto you own is how much trading volume you have as a stock, because liquidity is the lifeblood of a treasury. You know, do people own and trade the stock? Do they want to own it, and are they buying it? And here you can see that Bitmine and MicroStrategy account for 90% of all the trading volume of crypto treasuries. So out of the 100 or so total crypto treasuries out there, only 2 really are the ones investors are buying, especially institutions, because institutions can only own something that is liquid as well. And when you look at Ethereum only, you can see Bitmine is much larger than the peer group. So for instance, compared to the number 2 Ethereum treasury, we're 5 times bigger. In fact, in maybe about 3 or 4 more weeks, we'll be 6 times bigger than the next largest treasury. And if you look at trading volume, which is the chart on the right, we're 14 times more liquid than the next treasury. So if you're an institutional investor, really there's only one treasury you're going to be buying on Ethereum. So now you might be disappointed because Bitmine is down. You might have bought it at a higher price, but there's a reality that the digital asset treasuries are going to track the price of crypto. So we're not designed to go up if Ethereum goes down. But what's important is for us to outperform Ethereum on the ups and the downs. Last year, Bitmine launched its treasury strategy on June 30th. And from June 30th to the end of 2025, Bitmine rose 500%, whereas in that same 6-month period, Ethereum rose 22%, which means on the upside, Bitmine outperformed Ethereum by 48,000 basis points. Okay, so think of that as in the upcycle, we're going to drastically outperform Ethereum. In 2026, Ethereum is down 32%, but Bitmine stock is down 21%. So it's, again, disappointing that it's down, but you can see we're outperforming Ethereum when it goes down. And there's a couple reasons for that. We have 4 pillars of growth, okay? The first is to maximize the yield on our treasury. So that's simple. Ethereum generates a yield almost 3%. So we just need to optimize the yield for you if you own Bitmine. And we can do something else too. We can actually pursue alpha strategies. So we get money every week because institutions are buying our stock, and we can time the purchase of our Ethereum. We decided to work with Mosaics and Tom DeMark to basically identify the optimal time to buy Ethereum. We have estimated it's saved us about $100 million a month. But here's what's interesting. We've been preparing for the end of the crypto winter. So we've been assuming Ethereum prices would fall this year, which they have. So we've been slowing our purchases, but we've built a lot of cash. We have $1.2 billion of cash now. But we've also decided to do something very important. We think that it's a V-shaped bottom coming. So we want to lock in low Ethereum prices far beyond our purchasing capability so that when Ethereum prices recover, we've locked in really cheap Ethereum. Again, that's working with someone like Tom DeMark. And unlike other crypto treasuries, we have no debt. I think it's been important to keep our balance sheet clean. So we don't have any convertible bonds, we don't have any debt, no preferred stock, and we have, again, over 1.2 billion in cash. And we're making money from staking. As you can see, our staking annualized revenue by week is pretty big. It was only 34 million in December. Now it's about 175 million a year, but we haven't fully staked our ETH. Our staked ETH is, when we fully stake it, is going to be $259 million annualized, and this is at $2,000 ETH. But by the end of the year, we should be crossing 5% of Ethereum, which would get us to over 300 million of annual staking rewards, which, think about it this way. On our staking only, we're making $1 million a day. On our cash position, we're making roughly $45 million a year. So Bitmine generates close to $1.3 million a day, and we're earning that for you as a shareholder. So you don't have to worry about this company in terms of, are we in trouble? You just have to wait for Ethereum's price to recover. But in the meantime, we're very profitable. And of course, let's say Ethereum's price recovers to 12,000, which we think is a really reasonable target. Our staking yield, just on our current Ethereum holdings, will hit $2 billion. And again, that's $2 billion without any debt, without having to do anything but, again, hold our Ethereum. And you're wondering, how did we get so much, or how did we outperform Ethereum? The reason is because we're increasing how much Ethereum per share that you have. And that's why we've been outperforming Ethereum itself. So from the inception of Bitmine to now, for you as a shareholder, we've increased your Ethereum per share by 10 times. And that's why you're going to outperform Ethereum holding Bitmine stock, because every month we're increasing how much Ethereum you have per share. Okay, the second pillar of growth for Bitmine is we are investing in moonshots. And I do want to talk about two of them. The first one is Beast Industries. We made a $200 million investment in Beast. Many of you may or may not know who Mr. Beast is, but he is the biggest content creator in the world. He has not only a huge following, but he actually bought a bank called Step. So Mr. Beast is getting into the financial services business. Well, that's where Bitmine comes in, because, you know, in our view, Ethereum is the future of finance, and now we're working with one of the biggest content creators in the world. What does that mean? Well, in every generation, okay, and a generation means like your parents or your grandparents, there was always a single financial institution that marked that generation. So for baby boomers, online retail brokerage, Charles Schwab was the iconic company for baby boomers. For Gen X, it's companies like Blackstone and BlackRock. These were formed and targeted for Gen X folks, and there were 66 million Gen X in the US for these two companies. You may be more familiar with what millennials have been for their, in that generation, which is larger than Gen X and boomers. There's 75 million millennials. It's been companies like Robinhood, SoFi, and Chime. Well, what about for Gen Z and Gen Alpha? Mr. Beast is the biggest content creator. He is really the iconic content creator for Gen Z and Gen Alpha. That's about 120 million combined. And he's creating Beast Financial Services. and we expect him to dominate that generation. Now, that generation today doesn't have a lot of money because they're quite young, but keep in mind, baby boomers, when they were in their 20s, didn't have a lot of money, but Charles Schwab was created. Gen X didn't have a lot of money when Blackstone and BlackRock were created, but they're very wealthy today. And the reason this happens is there's wealth transfer. Over the next 20 years, you can see millennials are going to inherit 46 trillion, and Gen Z is going to inherit 15 trillion. But keep doing this iteration. Every 10 years, Gen Z and millennials keep inheriting money. So Mr. Beast is really targeting and owning a universe of people that over the next 40 years are going to become incredibly wealthy. And but he's not just a YouTuber and with a bank. He is someone who dominates all of content. He has 1.4 billion unique followers, and his content is viewed by 5 billion people per month. Now, the second moonshot for Bitmine is Orbs. Now, we actually just made some changes and announcements at Orbs that didn't make it to our deck. But Orbs is investing in WorldCoin. Now, I'm not sure if you've heard of WorldCoin, but WorldCoin is the cryptocurrency that was developed by Sam Altman, who created OpenAI for proof of human. Now, what Orbs is doing, though, is they said, all right, we have proof of human, the most important proof of human network. They just announced that they're making an investment into Mr. Beast and have actually introduced Sam Altman and Mr. Beast. So there is going to be some collaboration, especially as OpenAI thinks about creating, and it's been reported, like in Fortune, that OpenAI wants to create a social network that only humans can use, and Mr. Beast is very interested in collaborating on that. So again, when you buy Orbs, which is publicly traded, you're getting exposure to OpenAI, which Orbs has an investment in, and it has an investment in Mr. Beast. So it's almost like if you want to have exposure to OpenAI today before they IPO, you should be buying Orbs because they have direct investments in both companies. And finally, Bitmine will productize. I'm going to fly through this really quick, but the main product is Maven so far. It's a staking operation. It's going to launch in the next 2 weeks. But we will be the largest commercial staking operation in the world today because we're going to have over $10 billion of crypto staked. And I want to wrap up by talking about where I think Bitmine's price will go. I continue to think the best way to think about Bitmine's price is to know or to have an idea where Ethereum could go. And in our view, the simple way to value Ethereum is to say, how does Ethereum compare to Bitcoin? Currently, if we look at the 8-year average, Ethereum's price should be at 0.05 of Bitcoin's price, roughly 5% of the share price. It got to 8% in 2021, and over time we think Ethereum, as it becomes a future of finance, should actually have 1/4 the price of Bitcoin. And we shaded this line here that we think Bitcoin can get to 250,000, which values Ethereum at somewhere between 12,000 to 22,000 if it gets to its 2021 ratio, or even 62,000 if we get to Ethereum priced as a payment rail. And Bitmine's price follows Ethereum. It's roughly a 90% correlation. So let's think about future prices of Ethereum and what it means for Bitmine. If Ethereum gets to 22,000, then Bitmine share price is around 500. If Ethereum goes to 62,000, which again we think is fairly valuing Ethereum as a future of finance, Bitmine share price is 1,500. And then Joe Lubin thinks Ethereum can get to 250,000. That would value Bitmine share price at 5,000. So as you can see, tremendous upside.